Hey everybody, today is January 22nd, 2024, and today we're going to talk about the stock market and where I think the stock market is going to head in February 2024. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so this is our first video of the new year. Happy New Year, everyone. Hope everyone had a great vacation holiday. Yes, so where we left off last time was at the end of December, right? And we had this spectacular rally that came off this October low, right? And this was when interest rates were starting to come down after having a slight boost in the slight rise in the summer. And so we look over here. Last year we had a bit of a rise in the summer, right? Let's see. So we were coming down, and in the summer around June, July, we started to rise. And so that coincided with the stock market coming down a little bit, right? Because people were saying, oh, well, if interest rates are rising again, is the Fed going to pause, or not pause, are they going to suspend cutting rates, right? Because everyone's expecting rates to get cut sometime this year, right? And well, what happened was the rates started to drop again, right? For 2 straight months, October, November. And so the market had this nice rally, and in anticipation of at least pausing. So we had like a pause rate, the Fed pausing and potentially cutting. Right now, I said that I don't think we would see cuts in 2023, and I said that I think we would start seeing cuts sometime in Q2 or Q3 of 2024. And so far we haven't had any. So far 2023 we didn't get any cuts, rate cuts. However, we did have a rise. So CPI came out recently this month. For December, we saw it move up from 3.1 to 3.4. So this is how the market sort of reacted by coming down a little bit, right? Right here. And so people are expecting that we probably won't have a rate cut in the next Fed meeting. We'll probably have like a rate pause, but there's still optimism, right? I mean, in the bigger picture, we pretty much have reclaimed the all-time high for the S&P 500, right? And this is after 2 years of correction. And I think that there's a lot of tailwinds right now. Obviously, we wanted to see inflation come down, and in all fairness, we did expect it to go up to around, I think, 3.3. So it did go up a little bit more, 3.4, but it wasn't something dramatic like 3.6 or 7 or something like that. So there is still hope that perhaps the next CPI data report in February will probably be a little, either we pause or we come down a little bit, and that's what we want to look for, right? So if the CPI report shows that inflation is starting to cool, that will increase the chances that the Fed will cut interest rates, right, which are above 5% right now, and that will continue. That'll give more fuel for the rally to continue higher, right? But yeah, like there's other tailwinds, right? A lot of the tech stocks like Apple and Microsoft, they're starting to lead, and Microsoft just broke all-time highs, so that's a major contributor to these market indexes, right? And so it's general optimism in the tech sector, and also generative AI is leading to this massive recovery into all-time high. So right now we're in price discovery, right? However, I said that despite the optimism, we did look sort of overbought, right? I mean, on the weekly chart, we had multiple green weekly candles in a row. And I said on my Twitter page, or I guess now formerly Twitter page, right, x.com, in a previous post back in mid-December, that the S&P 500 continues a strong rally, but looks due for a pullback, right? This is after multiple weekly green candles in a row. And I said we're facing resistance near all-time high. So that did happen. We did see some chop, right, once we hit that level. But most recently, the last couple of days of this year, we just finally broke above. And usually when we break above to all-time highs, the market usually will, of course, let's get a cleaner chart. Usually when we break new all-time highs, right, when we clear multiple years of just either sideways or correction, we tend to have a nice breakout high, right? And most recently here. So I do expect in the bigger picture for the market to continue higher. What will happen in the shorter term, I do think that because the CPI report was a lot hotter than expected, right? I do think that the market is going to continue to face a bit of resistance. So I still stand by this. This was January 15th, so just last week I wrote this. Facing resistance near all-time. So even though we're above all-time high, I still think that we should hold some caution. like I said, I think in the bigger picture, we'll probably continue up higher, but that doesn't mean we can't chop around, right? Especially now that the probability of an interest rate cut in the next meeting has gone down significantly because, of course, the CPI has gone up. So, of course, the next thing we have to look for in February, which I'll cover in our next video in February, is the CPI data report for the month of January, which is going to be available February 13th. And we want to see the CPI inflation report reflect it coming down again, right? And that'll increase the chance that the Fed will cut rates and give more fuel for the stock market to push up higher. But I do think that you should heed caution, right? The VIX has been going up recently, even on green days, right? Like right now, the market is green, but the VIX is also green, right? Yeah. Oops, let's get the S&P 500. Usually when the VIX and the S&P are following to each other, that usually marks the top, right? Or a bottom if they're both like red or both green, right? Usually they're inverse proportional, right? And so like they move inversely, sorry. Right? If the S&P is crashing, usually the volatility is very high. And usually when the S&P is up, moving higher, like it is today, the volatility tends to drop down. So the fact that they're both moving in the green direction shows me that there's probably some sellers coming in or people placing bets that the market has reached a temporary top. So my prediction for February is I do think we're going to continue to chop sideways until we get that CPI report. I think that there's people who are hedging, of course, with the VIX going up higher, that this could be a very volatile event going into the next the CPI report. So really everything is up pretty much down to the CPI report. But so far we also have earnings, right? And earnings has actually been going pretty well. A lot of the market leaders, of course, we talk about Microsoft, been hitting all-time highs. We had the bank stocks recently, which did okay, but so far it's been a pretty moderate earnings report or earnings seasons. Fear is still very close to extreme greed. So again, you want to heed some caution, right? We still had this spectacular rally, but again, with the CPI data a lot hotter than expected, you just want to be a little bit careful, right? And with the VIX starting to move up, right? It just shows that the institutions are starting to place some, they're starting to hedge going into the next report, right? So overall, I am bullish on the market in the long term. Now that we've cleared, again, the previous all-time high, just get a cleaner chart. Historically, when we clear previous all-time high, like I said, we tend to move up higher. It's just we don't know exactly what's going to happen in the short to medium term, how that price action is going to play out. But I do predict that because the CPI report was a lot hotter than expected, we probably will see some choppy price action, right? However, in the next meeting, if the February 13th CPI is cooler than expected, of course the market's going to expect rate cuts going forward, and I think that's going to lead to a large market rally higher. So if the inflation report, so we might see price action something like this until the next, sideways until the next CPI report in February. If it's cooler than expected, I expect the market to go up higher. If it's hotter than expected, I expect the market to continue to chop sideways. And if we're not able to hold at least 470 in the SPY, I think we're going to probably come down. And there are some gaps down here that haven't been filled. So that could be something that can be enticing to bears who want to short the market, right? So that's pretty much it. Not much else to say. Nothing has really happened. It's only been a couple days in this new year, and yeah, I would look forward to doing more analysis for the remainder of 2024. Again, I hope everyone had a great Happy New Year, and I will see you next month for the CPI update, and we'll see how the price action develops going forward. Thank you for watching this video. If you found it helpful, useful, and informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.